are gathered here to explore the immense potential and global impact of Islamic finance in creating solutions that drive economic growth. We are indeed pleased to co-host this training in partnership with Islamic Development Bank Institute. In recent times, Islamic finance has emerged as a dynamic alternative source of financing development within the global financial landscape. With principles embedded in ethical and Sharia compliant practices, it has gained recognition as an alternative financial system that promotes fairness, transparency, and shared prosperity. Islamic finance offers a diverse array of products such as Ijara Sukuk, Murabaha, among others, thereby providing sovereign states, states and corporates with access to capital within the confines of Sharia principles. According to the banker database globally, total Sharia compliant assets, excluding Iran, grew by 13% to $1.6 trillion in 2022, with 57% held by standalone Islamic finance institutions. This data print further highlights the increasing acceptance of Islamic finance as a viable financial system. Nigeria's foray into Islamic finance began in December 2012 with the establishment of Nigeria's first Islamic bank, that was closely followed by the milestone auctioning of 10 billion naira, which at the time was $61.87 million, Sukuk Ijara on October 10, 2023, issued by the Osun State government. Since then, there has been measured progress in using the capital markets to raise Sharia compliant funds. The federal government over the years has issued different tranches of Sukuk bonds that have been used for infrastructural projects all over the country. Recently, corporates such as Taj Bank, 10 billion Sukuk issuance, states, Lagos State 19.9 billion have followed suit. Year to date, market capitalization of Sukuk bonds listed on NGX sits in the region of 766 billion naira, 2.3% of the total debt capital market capitalization. Fitch Ratings recognizes the potential of Islamic finance in Nigeria and forecasts that Nigeria's Islamic finance industry will continue its growth trajectory in 2023 to 2024 on the back of government Sukuk issuance and policy push. Currently, Nigeria houses one of the largest Sukuk markets in Africa with an outstanding issuance of 766 billion, which is about 913 million US dollars, albeit small by global comparison. With Nigeria having a significant Muslim population of about 50% of the country's over 200 million population, the long-term potential of Islamic finance in Nigeria is indeed very significant. The growth of the Islamic finance industry in Nigeria offers several potential benefits. These include access to banking services for underserved Muslim populations, access to finance for small and medium-sized enterprises through its risk-sharing characteristics.
The capacity building programs are instrumental in nurturing a pool of professionals well versed in Sharia compliance instruments, aligning with the Commission's broader mission to strengthen the foundation and capacities of the non-interest financial market in Nigeria. And I believe this is why it's important that what the NGX is doing today in collaboration with the Islamic Development Bank is quite important, and we encourage all those who are participating to try and make it a point of to make it important that you take something back and also add something for the development of this market. Now, having said that, the non-interest capital market in Nigeria has witnessed significant growth, with notable highlights being the issuance of the Sukuk bond. The federal government of Nigeria has played a leading role with sovereign Sukuk issuance totaling 742.557 billion from 2017 to date. In addition to the government issuance, corporate participation has contributed to the market expansion, including the issuance of 10 billion Sukuk by family homes and Taj Bank. Osun State made history by being the first to issue a Sukuk in Nigeria, raising about 11.4 billion. This development underscores the increasing prominence of non-interest financial instruments in Nigeria, demonstrating the market's sizable and diverse presence, and both government and corporate entities actively participating in Sharia-compliant financial activity. Furthermore, the non-interest capital market includes Sharia-compliant mutual funds and commodity funds. We recently witnessed the launch of the Halal Commodity Fund on the Afex Commodities Exchange. This reflects a broader commitment to providing diverse investment opportunities that adhere to Islamic financial principles. Investors in the market now have access to a range of Sharia-compliant financial instruments, contributing to the overall depth and inclusivity of the non-interest capital market. This development underscores the responsiveness of the financial sector to the growing demand for ethical and Sharia-compliant instruments investment options in Nigeria.
So Islamic Capital Market, or ICM, if you see the term ICM, it's usually refers to Islamic Capital Market. It's a capital market transactions for Islamic institutions, usually avoiding those kind of elements, as you can see, prohibition of payment, of receipt of interest or riba, we have to avoid it. Prohibition of activities which include elements of gharar or ambiguity, like mostly derivatives. Like most of derivatives are not really allowed because you don't know what you are going to trade or what including in it, and the quantity and the quality of the products you are dealing with. So usually are not allowed in Islamic capital market. Also gambling. Again, derivatives and short selling, it's a short of gamblings. You are gambling on someone rewards, someone loses. So again, it's kind of prohibited in Islamic finance. Also, any kind of goods and sales which is prohibited under Islamic law. So mainly like pork industry, drinking alcohol and other things cannot be allowed within the limitation of this kind of industry. So this is the main things allow, Islamic capital market to thrive and to develop, because those kind of things are not allowed under principles of Sharia.
Equity is more about the business potential rather than credit ratings, because credit ratings are mainly towards the debt side of it. And of course, sometimes you want to do it for strategic reasons, specifically if you want to have new management come over or new board of directors come over or new investors from local companies or overseas companies. From the investor's point of view, we know the answer: profits and returns, and of course part ownership, like you mentioned, and for strategic partnerships. So equity is fine, we all understand why is it, but then what's the key thing about Islamic equities? How do we define Islamic equities? Now, if we followed the first session where we talked about some of the elements, that there should be no interest, there should be halal and haram business, which is basically permissible activities and impermissible activities. There should not be excessive uncertainty, excessive risk. There should not be gambling elements. If you screen all these things out, then the business is Sharia compliant. All right. Now, when you say the business is Sharia compliant, that means it's an Islamic business. Now, the question is, when you talk about Islamic equity, do you think there is a company which is a conventional company, and then there is a separate company which is an Islamic company. Are these two separate or are they the same?